Hey guys, what's up? Hitori here. Welcome to a slightly different episode. We won't be doing the weekly market outlook this week because we're coming into, well, for me, it is technically the final trading week of the year. And normally, volume kind of dies off during this week because, next week is Christmas. And I think a lot of people won't be trading as well. Many traders online have called it the year here. And I just decided, you know what? Seeing as trading is likely going to be lackluster next week, why not I do a different type of video? Instead of the normal, hey guys, weekly outlook here with TradeX Prop, what about we do something a bit more trader centric in a sense, like looking at the actual development of the trader instead of going, hey, like the fundamentals are pointing this, technicals are pointing that. Since next week is likely going to be a very slow week in general, I just decided, you know what, let me do something different, right? So I think we're at like 30 plus episodes on the weekly outlook. Even before the YouTube series, we were actually doing it on Discord. So it's crazy that it's been you know, actually more than a year now since I've been doing the weekly outlooks. You can see the history actually on our Discord channel. There is actually a segment for that. So yeah, you could go and check it out there. But okay, without further ado, once again, sometimes I yap a bit too much. Let's get straight into the content. Now, first off, do understand that this is not scripted. This is a more raw one-to-one session with me, but also with yourself. Okay, so I'll be doing like a few segments. First segment is going to be something called the end of year recap. So this is mainly just to cap off the year, do like a advanced self review on how you think your year has been. And we'll start off with the first question here, which is how has your performance been like this year? Okay, just focus on the first question right here, the first one, right? How has your performance been like this year? Has it been positive? Has it been negative? Right? Are you overall in profits or are you in drawdown? Right? This is very important because it allows you to gauge your track record for like 1 year, which I know it isn't like a very long time, but it is at least better than none. It's a good first step, right? So if you haven't really been journaling, if you haven't been keeping track of your performance for the past year, you probably can't answer this question. So that's already one thing you can tick off, right? Which is next year, I'm going to be doing more journaling, more tracking, so I can actually have an somewhat accurate reading of my own performance. Okay, for the people that have been profitable this year, amazing, great job, pat yourself on the back. You could decide to take next week off if you want, or you could decide to just say, "Freak it, I'm gonna go into the markets and catch whatever um, opportunities they are." That's also valid. Depends on yourself. Personally, December has been a great year. December has been a great month for me this year. Um, I've had a good winning streak, which has unfortunately come to an end last week. So I might just cap off the year in a loss, but that's fine. That's fine. It doesn't mean that next year will be a bad year. I know some people take into the tradition of, we have to end the year on a good note and things of that nature. But it's more so you have to be actually actively doing things to improve yourself himself, saying things like we have to start the year on a good note or end the year in a good note. Really like just start, right? Just start something good and try your best to end something good. Okay, so how has your performance been like this year is really important. If you're in drawdown, understand that once again, it is not the worst thing to happen. Obviously, it depends on how much drawdown you're in. How much did you risk your account on, if it's a personal or if it's a prop firm account like the ones that we offer at TradeX Prop. Are your accounts in drawdown? How many accounts have you blown or failed this year, and track how much that dollar cost is compared to like your income, stuff like that, right? Because I know a lot of people that trade with us, or a lot of people trading in general, they aren't full-time traders yet, right? And that's fine. I hope that most of you are in at least some position of financial stability to be able to trade, because you don't want to be trading when you don't have income, or when you are not in a safe and somewhat stable financial position, because trading isn't a get rich quick scheme. All right, so get yourself some footing if you don't already have it, and you are likely going to see your performance increase, once you start getting a footing in your own life outside of trading, like income and a job and stuff, and some of those stuff, But anyway, uh, drawdown, if it's controlled, that's great. If it's bad drawdown, relax first. Think logically, think with a level-headed mind, and assess yourself. Where you currently are in your life. Is it like a big chunk of losses gone in trading? Is there any way for you to recover from it? Because there's not much I can say about people in profits. I kind of want to focus more on people that are in a really tough spot right now. And it really comes down to assessing yourself, having that self-awareness and understanding that, okay, I'm in deep shit. What can I do right now to get myself out of this deep shit, or at least, what can I do to survive? That's the key point here. What can I do to survive this scenario that I'm in? Okay, if that means you have to get a part-time job to pay bills, get a full-time job to pay bills, then you have to do it. Trading will always be there, but your health won't always be there. Like, I know the stress is a lot sometimes, or if you're not eating well, sometimes you really have to take care of your health first, because if you don't have health, you can't trade the markets, right? The markets are always going to be there whenever you come back to it, right? They might have evolved, they might have adapted, but the markets in general will always be there for you to trade, no matter what time you return back in the future. The key point is you have to make sure you're able to return. Okay, so if you are a person that is in a very bad situation, definitely look for ways to survive, and then think of ways to bounce back, right? If you're in profit, great job. All right, look to improve yourself, look to refine, but definitely don't overfit your trading strategy according to your equity curve, right? Which I'll go over as we move further down the questions. All right. Now, next up is I think we covered some of it, already. Note that this is not like a scripted video. This is completely raw. I'm doing this off the top of my head, and even these segments right here, they're actually thought out like 10 minutes before the recording right now. So do be a bit lenient on my structure of the video. I want to keep it as raw as possible to cap off the year, because that's what TradesProp is. We're honest, we're transparent, we're raw. Sometimes, things may not be ideal, but we always look to make it the best that we can, right? Same thing with this video. It may have its flaws, it may have things that are not up to par according to the ideal standard, but we're trying to keep it as real as it is, because like we said, trading isn't perfect. It isn't like we're stuck in fantasy land right here. It's a very tough industry, and we are always almost expected to adapt and evolve, right? So next one we have, are you satisfied with its performance, right? If you're in profits, depends on how much you're in profits, right? If you're in profit 1-2%, I do think there's a large space for improvement. But if you are like 12% in profit, 13%, 20%, right? I do think that you could pat yourself in the back, because the S&P has been performing like 24% this year, I think. If I'm not wrong, do not quote me on that. But it's definitely been performing well this past year. So if you have anything close to the S&P 500 this year, definitely give yourself a pat on the back. I think you deserve it. I think it hasn't been an easy journey, but there's nothing wrong with taking some time and be like, hey, you know what? I did a pretty good job, but job's not finished, right? Job's not done. Like the great late Kobe used to say, job's not done. So how satisfied are you with your performance? If you draw down, I can imagine you are feeling too satisfied. So this kind of like gives you like a reading on just your how bad you want it. Like some people they make 10% and then they're like, oh, I'm okay with it making 10%, a year. It's still good. It's still double digits, right? Money is money. 10% on 100K is 10K. After profit splits, maybe 8K, right? 10% on a 500K account, right? It's like 50K. How much do you need per year based on capital that is reasonable for your edge to change your life? Completely depends on yourself and of course your country, and how many people are you responsible for. Do you have a family? Are you a single bachelor? All those things come into answering this question right here. Sorry, that's the crude power future chart that I'm currently looking at. But all of that, kind of comes into answering this question right here. Matter of fact, let me just change this. Yeah. Right. How satisfied are you with your performance? So if it's somewhat satisfied, okay, cool. You can take a break for the rest of the year and then come back stronger when volume starts to pick up, maybe around, the start. That was a very bad voice break, but maybe around the second week of January is when volume typically starts to pick up. But of course, it's not always the case. It could start picking up next week. It could have large volume next week. It could have large volume first week of January. But typically that wouldn't be the case. Okay. So if you're not satisfied, then pick up the pace, bruv. Pick up the pace. Which brings us to our next question, which is, what do you think is the issue? What's causing you this lackluster performance? Right? Is it trading based? Things like, is it your edge not performing? Is it your read not reading correctly? Are you getting into bad trades? Are you getting into early trades? Once again, this all ties into if you're even tracking your performance and you're journaling correctly for the year. So if you haven't done any of these, you probably can't answer this question. But if you have, then what do you think is the issue? Like, because sometimes the reason why people say things like backtesting isn't that good is because backtesting you're just kind of just going back in time in price action, and then you're pretty much just going like boop 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 boop, right? Like it isn't taking into account things like what you have in your life going on at the moment. Are you working? Are you busy? Are you stressed out? Is your health not doing too good? It's an idealistic um way to track your trading edges performance. And if you have a trading system that's very much based on discretion, backtesting may not be that good. But I'll get into that in the later section. But for now, what do you think is the main issue? Why haven't you been trading correctly? Like, be honest with yourself right now. Is it your job? Is it your family members? Is it people around you? Are you not feeling well most of the time? Think about it. If everything's kind of okay, like your health is doing alright, you don't have much stresses in your life that's causing you to not be able to think with a clear level head, then a high chance that your issue for your performances may be based on your trading style, right? Are you day trading, swing trading, scalping, right? Are you getting into trades too early, too late? You're a bit too scared to risk. You're a bit too scared to enter into positions, or you just don't really have a clear enough edge, right? You aren't confident every time you press the button? Like, which one is it? That's something you have to answer, and that's only something that you can answer if you have journal your trades, right? Personally, at the moment, right, I was very sick to from May all the way into August. Right, I was pretty much sick every single day. I was heaty. I was, I just felt bad. My concentration wasn't there. My energy wasn't there. I was really sleepy. I was dizzy a lot of the times, and it was mainly due to stress. Work-related stress, and that really caused a big impact on my own trading performance. But now that that's passed, I've been doing pretty well for the past few months. So that's how I identified the issue, right? The issue wasn't more so trading related, it was more so health related per se. Okay, so you have to understand what's the problem statement first before you even look into changing things, because if you can't identify the issues, there's nothing for you to change, because you can only really change issues to improve on them, to either lessen the impact or completely remove them. So if you can't find the issue, quite frankly, you can't do any self improvement. So definitely take this time, write out everything that you think is causing you issues in your trading. It could even be non-trading related, right? It could even be things like, oh, I can identify the bias correctly, right? For ICT traders, it could be the drawn liquidity. For swing traders, it could be the long-term trend. I can get all those things correctly, but maybe work is too busy, right? If work is too busy, maybe you can't focus more on day trading. You have to go swing or even maybe position trading, right? If that's even a viable situation. Or if you are having a tough time in your life, like maybe work is just a bit too much and you're not feeling well, maybe take some time to think if at the moment trading is even something you could or you should be remotely interested in. Maybe you have to take care of your health, you have to take care of other things, right? Because trading in itself is supposed to be flexible. You can trade so many different markets that are active in many different hours of the day, and there are so many ways to trade the markets. And by ways, I don't mean strategies, I don't mean concepts, I mean trading styles. Things like day trading, scalping, swing trading, right? If you don't have any time throughout the day, maybe you work from 9 to 6, and then assuming you are, maybe in Malaysian local time, for example, and you really only have nighttime that's a bit more free to you, maybe you can choose to trade the New York session. Or maybe if you only have like an hour of free day every single day, maybe you can trade the New York Open or any time like that, that is preferable to your lifestyle. So, definitely do a self-assessment of, what's causing you these issues, and then, look into solving them, because I can't solve them for you. No one that's around you can solve them for you. Only you can do it, right? Be it actively doing or making hard decisions or telling people something has to change for you to get rid of this issue. All right. I think I kind of went over uh, this question here as well. See, this is the thing. It's raw, right? I'm gonna make mistakes because it's not scripted. There is no script. So I will have awkward moments like these where I kind of like go off script, not go off script, but like go off the topic and just like yap around and just say random things, or like not take into account the structure, and then just cover all of the questions. So do once again, do be lenient when you're watching this video. Just keep it between you and I. All right, but that one is more so. I just took a screenshot right here. Let me just. Yep. Do understand that this is reviewing your year, right? End of year recap. Okay, this shows to yourself, or at least shows to me, how dedicated you are yet to the craft itself, to the trade itself. If you don't have any journaling, you might be a few months in, maybe even a few weeks in to your trading career, and you don't understand why journaling is important. In the future, sure, I could make a video on it, but I'm sure that online there are a bunch of other different, trading content out there that teaches you how to actually, you know, write your own journal, stuff like that. But definitely that could be something I'll do in the future. But as of now, track your performance and then measure that across a significant enough period of time. A good start would be a quarter, right? If you're day trading with a higher trade frequency, if you are swing trading or position trading, you may have to track your performance longer. Maybe at least 6 months or maybe even a year, assuming that you don't take many trades in the first place, right? So complete this part in your own time. I won't go too much in that. Well, it's been 20 minutes, wow. But I think I need to save more time for the future, or for the upcoming parts, right? So the second one is discretionary versus mechanical, right? The strength is in the technicals. A lot of people online, they kind of say things like, trading psychology is the beast. It's really a battle of you against you, which is true. It is true, but I think people overdo the psychological part, right? I think it's something people always say when they don't have a good foundation in teaching the technicals, right? Um, of course, that depends on the concept in itself, but I do still think that the strength is in the technicals. For example, you are a person that hasn't practiced enough on the charts for your strategy, right? And your strategy is discretionary based, which means you maybe trade ICT, and you don't really have a mechanical way to figure out bias. You are just kind of using your own, understanding to form the context, to form that trade, which is fine, But if everything that you're about to do in trading depends on your own understanding of where you think the market is likely to go at any given point of time, and you're telling me that you don't practice or you have not practiced enough, how can you know where price is going to go with high probability? Of course we never know, right? But based on your model, how can you tell me you are not good at predicting price? Or how can you tell me you're good in predicting price if you haven't practiced enough? That's like saying to me, hey, I'm good at boxing, but I went to like 5 boxing classes, right? You won't know the jabs coming if you've only done boxing for a month. That takes experience. That takes time, and time on the charts, be it back testing, be it forward testing, be it demo trading, whatever, that builds strength in the technicals, right? Because it doesn't matter how good your mental resilience is. It doesn't matter how strong your psyche is. If you don't know where price is going to reach for, sometimes you are going to be getting yourself into heavy losing streaks and drawdown, right? So you have to practice in itself, and this really is important for people that trade concepts that are very discretion based, because everything depends on your own understanding of the charts. There is no right or wrong. You could literally just say, oh, this is support, or this is a liquidity grab of a swing low, or we are going into this this supply range, whatever. It's the same thing. None of it is wrong, and none of it is correct. I find it hilarious how people can spend hours on social media, quarreling with others, and then telling them, oh, you're drawing your swing low wrong, you're drawing, your supply zone wrong. It should be just the bodies, or not the wicks, or it should be the last candle before the engulfing. Doesn't really matter, does it? There are tons of people that make money drawing their areas like this, and some that make a fuck ton of money drawing their areas like this. Right? It doesn't matter how you draw your zones, because everybody trades different concepts, right? Like this one, some people see this as a order block, right? Cool, it is an order block. Some people see it as an area of supply, or it could just be price coming up, tapping this weekly opening price, and then doing this weak rejection right here. None of it is wrong, right? It all depends on how your concepts or your strategies help you form that narrative, right? So you have to practice. No one can practice for you. It doesn't matter if your mentor is the best trader on the road, because he's not pressing the buttons for you. You're doing it yourself. So if the driver isn't good at driving the vehicle, you're gonna crash, right? You're gonna crash. It just depends on how fast you're going. If you're going quick, you're risking a lot. You're gonna crash a lot sooner than you will if you're just driving slowly. But sometimes the market's unpredictable. It could just bam hit you there. If you're driving slow, it doesn't mean you won't get hit, right? It's just a lower chance of you, or at least you're gonna get hit slower, right? So that's on discretion. Always practice technicals, because if you don't know where price is gonna reach for, based on your own concepts, based on your own model, then quite frankly, you are just gonna be leaking your accounts, losing streaks, and then every time you're like, oh, I'm gonna bounce back, and then you never actually bounce back, because you don't get that the strength isn't in how resilient you are, it's in how much how much confidence you have in the strength of your technicals, right? But compare that to something that's a bit more mechanical, right? Mechanical means it's a bit more rule based, it's a bit more structured, it's a bit easier to find bias or to execute, stuff like that. It has less room for human error, even though I understand that there is no truly mechanical strategy out there. But there are strategies and concepts that are a bit lenient, at least on the aspect of human error, right? So if you have a mechanical strategy that is a bit more rigid, it means that you won't be able to have a lot of room to exercise your trading experience. Like maybe sometimes the model showcases to you that you have to buy here, but looking at the charts, you're like, looks a bit whack, but hey, it's the model. Let's enter the trade, since it's just part of the statistics anyway. In that case, when you are trading a mechanical model, it's more so dependent on how much data you have gathered in based on your strategy, because a mechanical strat is too rigid, or most times too rigid, for their trader to exercise their experience, which makes them susceptible to losing streaks. Because imagine the model was telling the trader to buy here on a pound dollar right here in this large down move. Sure, sometimes they would have caught some wins, but we're just bearish right here, right? Super bearish leg. So sometimes the trader could look at this and be like, oh, that's a pretty bad bearish chart. Why am I buying right here? Right? So they might have taken a lot of losing streaks right here, but when the market is ranging, like maybe right here, then they're having a great time, because they're taking wins. It tells you it takes this, it comes down, took a short here, stuff like that. So it really depends on what the market's currently doing. So you have to find data on when your mechanical edge performs the best, and when it performs worse, right? Because the markets can trend, or it could consolidate and protract and trend. So which one does your system perform well under? It's completely up to the trader to determine. So definitely spend a lot of time forward testing for a description-based strategy, but for mechanical-based strategies, definitely spend a bit more time on backtesting past data because they are already ready and available for you to get. Okay, but both of these you definitely have to remember to forward test them because the markets are, once again, forward looking, right? So with that in mind, I do suggest most people here to find a simple to replicate model. Now I say simple, but it doesn't mean easy, right? That's the one thing people get wrong. Simple does not mean easy. Simple means simple in its logic or simple in the way it forms, but definitely not easy. Okay, trading is not easy. They always say keep your trading simple and easy, but really trading in itself is already not easy, so you can't make it easy. You could make it simple, however, maybe it has less filters. Maybe you're trading support turns resistance. Right, so definitely it could be simple but not easy because how can something be easy when the markets in itself are chaotic? They're random, right? Or at least at least I like to believe they are random. All right, because the markets are illogical more than they are rational. Okay, so find a simple to replicate entry model, or at least a model for your bias slash narrative. This makes it so that once again it reduces your room for human error, because the reason why algorithms and robots they perform well or even better than humans in many different aspects is because human error tends to kind of overshadow the pros of being a human trader. Now, manual traders can be profitable, of course, but like I said, it purely depends on the execution in itself. Trading is mostly about execution. If the executor is in a bad position or is in a bad uh, bad condition, then even if the edge in itself is profitable or should have been profitable, it may not perform well because the person clicking the buttons is entering too early, he's a bit sick, he's not seeing correctly, he has a headache and stuff like that. That makes things difficult. Or if he's too busy with life, with his job, with his family, with his kids, whatever, he may miss an entry. He may make the entry too complicated to replicate day in day out, which makes it hard to track performance, right? Because sometimes you maybe let's just see maybe sometimes you take this as your supply, sometimes you take this as your supply, sometimes you take this as your supply. Like, which one do you actually use, right? So keep it simple to be able to replicate it every single day, but definitely do not think that it's easy to trade. It's not. Simple doesn't equate easy, right? So this just allows you for an easier time to track your performance with reduced human error. Okay, reduced human error. All right. All right. Last but not least, what the hell is that? Oh, I pressed it. All right. Find one that fits your lifestyle or suits your lifestyle. This is the one thing that's most important, right? Because most of you are probably not full-time trading yet, or maybe you don't even want to go full-time. That's completely fine. In fact, I'd argue that's better for most people, right? But that's for a different video. Now, find one that suits your lifestyle. Because for everyone really in trading, you'll be trading for maybe a few months to a few years before you even find any hint of profitability. Most traders are either stuck in break even, which is pretty good, or they are going to be experiencing drawdown, in terms of how much they spend on courses, how much money they lost in the markets. And which is why it's kind of unrealistic unless you are born into a wealthy family. Of course, that's completely up to fate to decide so. But unless you have someone else supporting you, it's hard to say that you don't need income. Most people need income, right? They need money, they need cash flow. Something has to bring in money to put food on the table, to pay bills, to pay rent, all of that stuff. So most people, I assume, is either working a full-time job, or maybe sometimes a part-time job, or they might still be in school. That's great. But you have to find one that suits your lifestyle and your schedule, right? I think I went over this a bit just now, but look at trading as a good friend. It can be with you no matter where you are, what you're doing, right? But if your relationship with trading starts to get toxic, you start to realize that your friend is a bit kind of clingy, over or protective of you. You think about trading all the time. It gets a bit toxic, and then that's a big no-no, right? I know online a lot of people say, to be able to succeed in one thing, you have to be crazy about it, or at least be some sort of crazy about it. And to be fair, I've been there. I've had dreams of candlesticks. There were times where I couldn't fall asleep because I had this one idea that I thought that could make me profitable, or like this model that I thought was going to work out. And then I'm like, I can't sleep. I have to test it right now. And then I will go on the charts at like 1 a.m., 2 a.m. and just start backtesting the shit out of that one model. And then realize that, you know what, this isn't as simple as it seems. And then I try to fall back asleep. I can't fall back asleep. Next day I wake up and I feel like shit. Right? So don't let trading control your life, but definitely show it love and attention. Because if you give trading too much and then you don't get results, you are going to feel burnt out really, really quickly. And then when you feel burnt out, you are going to be like, you know what, screw this, I'm out. Trading is a scam, it's a sham, it isn't real, you can't make money off of it. And then you just leave and quit the road of trading forever. And maybe in a different universe, you had the talent for it, you had the skill for it. All you needed was just time to allow yourself to get used to the markets and to sustain yourself enough to go from a losing trader to break even to then profitable. But these things, they take time. That is not time, this is time. It takes time. Just like how the time chart is on the x-axis. It takes time. And this is your equity right here. This is your profits. Right? So you need to be able to sustain yourself, to not feel burnt out, to allow your edge to play out. Be it your own understanding of the markets, or be it a mechanical model. You need time to let it play out, right? So you can't over risk in trading. Same thing as you can't go all in into learning to trade and then suddenly just blow up and then you quit, right? Don't do that. Find one that suits your current lifestyle, and understand that it has to suit your lifestyle, because before trading is your everything, trading can't be your everything. Some people, they look at trading as like this holy grail to make money. And yes, there is lucrative amount of money to be made in trading. But before you get to that stage, you have to understand that trading cannot be your everything. You have to look at the people around you, your friends, your family, your own hobbies, and then say, you know what, those things are pretty important too. And then you have to find a good balance between the two to be able to succeed. Okay, so find one that suits your lifestyle. Don't make it your life. Don't make trading your entire life until you are ready. Okay, don't blow up your accounts by over risking. Take it slow and steady. Okay, the markets will always be here when you're ready. So just make sure you can get ready, right? There's no point in just going blasting and then losing all your shit. It doesn't matter that way. All right. So, well, I've been yapping for 40 minutes. I think this is the first time I've ever done a video like this, ever. Not just for Trix Prop, but for myself as well. I've never done a video where I just yapped about traders, the development of the traders so deep. And this isn't even deep. This is like, I feel this is just like basic stuff that every trader needs to know, but sometimes it's hard to find. So, end of year, next week is Christmas. Don't push it. Expect really choppy market movements. Personally, I will still be showing up every single day on the charts, but probably somewhere I'll have like a text written down things like Christmas, or maybe like Christmas, bad volume, don't force the trade, something like this. Probably make it like 20. I'll probably stick it out there. So yeah, something like that. So it just takes. This is the anchor text right here. So don't force yourself, and definitely don't force trades. If you feel like you need some time off, and you've truly worked hard, take that time off. Nothing will come out of you staring at pound dollar when the markets are not moving anywhere. Right? Yeah, so I think I'll leave it at that. In the future, if this video gets good reviews or people like this kind of stuff, I will probably continue to make more, more structured ones. At least this one's kind of like a raw video. And yeah, I'll leave you guys to it. Take care, stay safe, have an early Merry Christmas from me as well as the team here at Trix Prop. We wish you all the best in your challenges with us, but most importantly, we wish you the best in life. And I hope you close off this year on a reasonably good note. If it's not good, cheer up. It's a bad year, not a bad life. Okay? I will talk to you guys in the next market outlook, where we revert back to the normal fundamental, technical forecast, things like that. And I hope you guys have gotten value from this video. Peace.